as we begin, I'd like to acknowledge that we're having this conversation just a couple of days after hitting a new high in the number of daily cases of COVID-19 across the globe. The coronavirus pandemic has fundamentally transformed the way organizations function and the way many of us work, shop, and interact day to day. In some geographies, lockdowns are beginning to lift, and cities are beginning cautiously to reopen. And many are asking whether and how these changes will endure. Today, we'll talk about the implications of this generation-shaping moment for leaders looking not only to survive this crisis, but to emerge stronger and better prepared for a new and transformed future. Joining me today are Brian Gregg, a senior partner and co-leader of our North American marketing and sales practice, and Kelly Ungerman, also a senior partner and a leader in our retail and consumer practice. Brian and Kelly will be talking about ways organizations can make a fast recovery from the blows of recent months and drive growth while preparing for the next normal. Brian and Kelly, welcome to McKinsey Live.
Thank you, Lucia. Great to be here.
And Brian, over to you to kick us off.
Sounds great. Thank you, Lucia. And good morning, everybody. Great that you could all take the time out today to join us. And as Lucia said, we're going to be spending the next 30 minutes or so on this topic of rapid revenue recovery. As we've all sort of experienced over the last couple months, a complete shock to the overall economy. And many executives are asking us at McKinsey, and we're doing a lot of research on this topic right now, is how can we chart the best path to revenue recovery and how to best get the top line to be actually resurge in this crisis moment. So with that, I'd like to maybe jump in if we can, maybe setting a little bit of the context. A lot of us, all of you, have spent a lot of time getting bombarded with headlines, data points. It's really been really a moment of overwhelming noise, if you will, out there. And so we just thought it'd be helpful to step back and sort of take stock on where we are. And I think what Kelly and I would say is this is really a moment of two stories happening all at once. I think on one side of the equation, there are some headwinds that are quite significant when you take them at face value, right? As you can see on the left-hand side of this slide, 50% of Americans reporting reduction in household spending. We saw U.S. retail sales drop to a record low, negative 16% in April, the single lowest month recorded on history since we started taking the data over 30 years ago. And then at the same time, as consumers start to shop in a very different way, we're seeing a big shock to loyalty. And this might be one of the bigger surprises of all, is as consumers have started to change the way they operate when physical shopping wasn't always an option, 20+% of consumers are reporting that they're either switching where they shop, the retailer, or the brand that they end up buying. And this is an interesting phenomenon. So on one hand, you could say, wow, what a crisis moment, quite a catalytic moment. On the right-hand side, I think Kelly and I would also say this is a moment to really embrace as an organization and realize it truly is a once-in-a-generation opportunity to reset the game board, to reset the leaderboard. Just one of my favorite stats on this, just to leave with all of you, is we literally accomplished in the last 90 days the same digital penetration that took us 10 years before to achieve. Just to say that again, the last 10 years, we accomplished basically 11 points of digital penetration across all retail, across all commerce. We accomplished that same increase in the last 90 days. This kind of human behavioral change is literally unheard of, except for in these major shocks. At the same time, we also recognize from looking back at past recessions and also past shocks is that companies that actually invest in and win in the customer experience, they emerge stronger, right? In fact, to the tune of triple, 3x the type of cumulative shareholder returns that we see other companies being able to generate. So the customer experiences has never been more important than now. And finally, that this is not just a hiccup. I think we all realize this at this point. but about a third of Americans would suggest that this is going to be a longer than a 2 to 3 month kind of economic hiccup that we see. And we know from looking at other countries around the world that this is not something that just rebounds right away, and that this is likely with us for a while. So you put these two together, and with this backdrop, we say, what do you do, right? I think that's the question of this morning. How do we get revenue to start ticking in the right direction? And what are the hallmarks of success that we've seen in doing McKinsey's research and talking with companies around the world? So with that, I think we'll go into the 5 hallmarks of what we could believe and like to spend the rest of the time on today, of what we think companies should be doing and thinking about right now to emerge stronger. We're picturing them here, and we'll spend the rest of the time on this together. Kelly and I will. But just to cover them quickly. The first one, multi-speed management. This is one you're going to hear us talk a lot about, and this is really about a muscle that we're seeing organizations start to build. Not so much a one-time project, but literally a muscle around operating in the now, operating in the near, and then operating in the next. And we'll go into what exactly that means. Second is really around reimagining the business. I think given the stats we just shared, you can imagine why this is the moment, if ever, to reimagine what a true business transformation should look like for your organization. Our third hallmark on this is really around what we call granularity. I think granularity is not a new concept, but what we're seeing is with the extreme volatility and the variability literally by individual zip code or individual customer segment like never before, companies' ability to handle granularity will be at a premium. The fourth hallmark, virtual agility. I think agility has been something spoken about for years now. The ability to do this at scale and do this in a virtual world is really the new news, and we'll share a few thoughts on that. And then finally, not to understate it, but yes, we're talking about revenue today, but this is a moment to do it in a self-banked world. What we mean by that is funding the growth as you go. And we'll talk through all 5 of these as we work through the next 25 minutes or so together.
Brian, so before we move into these particular 5 hallmarks, a question came in on the last slide to your point about the shock to loyalty being quite interesting and perhaps counterintuitive and unexpected at a time like this. What's driving consumers to switch brands now of all times?
Yeah, this is an interesting one, Lucia. I can give a quick thought, and then Kelly, I know you've looked at this as well. I think my initial thought would just be, given the amount of change that has happened to customer shopping journeys and decision journeys, no matter what category we're talking about, we're all starting in a very different spot, right? Think about it. Convenience has essentially been redefined. Convenience used to be, for many categories, what store is either 3 blocks from my house or in a 3-mile radius from my house. That's no longer the questions that customers are starting with, right? They're starting with safety, hygiene. How do I get a package without having to touch contactless, without having to touch anybody or anything? So this is a bit of the answer of how customers are actually starting to shift the way they think about choices in the world. Kelly, I know you've studied this quite a bit. Anything you'd add?
Yeah, no, I think it is an interesting question. And if you look at it through a brand lens, one thing we are seeing from the research and from some markets that are a little bit further ahead is a few things. And most of the brand switching so far has been due primarily to availability. So over 60% of respondents are saying, I'm switching brands because it simply wasn't in stock. And I would say that was even more true, as you can imagine, in the early days of panic buying. But we're also seeing factors like, trust and safety feature as really important motivators, and those tend to be kind of in the 30 to 40 range. And then, as Brian said, there's this bucket of responses around ease of use, convenience, things like longer shelf life, larger packs, and those appear to be sort of timeless drivers. I think the other interesting thing we're seeing is just this value polarization. And we saw some of this in the last recession, but this time I think there's some nuance to it. We're seeing about a third of consumers who are planning to trade down, but ironically, some that actually are looking to trade up, and in some cases up to 15 to 20%, depending on the category. And for those that are trading down, by and large, their preference is to stay with the same brand. And this is especially true for durables, a bit less true for more discretionary categories like apparel. So, some interesting trends that are here to stay, but clearly with some nuance in the current environment.
Yeah, so no doubt, Lucia, a big point, and I think just to put the exclamation point on it, think of it as, in some ways, 20% of customers are up for grabs, right? I mean, when else can we say that is the case? And so I think this is back to the true moment of a generation to reset the game board, reset the leaderboard, and be able to win with consumers in these new times where convenience, safety, and to Kelly's point around price premium as well as assortment, frankly, and in stock is really more important than ever. Maybe we continue on with the hallmarks. So maybe we go into the first one around multi-speed management, just to unpack this one a bit. And one helpful analogy perhaps here, given this is a bit like a true shock, almost in the same way the military thinks about going to battle. We studied a little bit of how military teams think about these kinds of scenarios. And what you find is that, I think a very good analogy for what we're all dealing with right now is, how do you actually allocate the right amount of time and attention to the multiple horizons or the multiple speeds that you're confronting? On one hand, there's the crisis in front of us and having to navigate the here and now, the hour-to-hour grind that you're all going through. On the second, there's likely a recovery ahead of us in some form or fashion, a lot of uncertainty about that, but what happens then? And then finally, we're going to emerge in a next normal. It's not going to look like it did before the COVID-19 disease hit, but it is going to be a normalcy that we'll have to know, recognize, acknowledge, and ideally be able to emerge stronger. An interesting factoid here from some of the military teams is how they think about allocating mind share against this, right? 2/3 of the time and attention often going to that first hill, if you will. We've got to take that hill. It's in front of us. 2/3 of our attention needs to be how do we make sure we do that well. That said, reserving 1/3 of the capacity and leadership mindset to think about what's next and then how to actually best navigate what's ahead of them, to plan that recovery, and frankly, to shape the next normal that's ahead. I think we're seeing management teams starting to get their arms around this ambidextrous muscle. Being able to operate at all three of these speeds, but at the same time, is not often something that we've had to do, frankly, in the past recent history, but is at a premium at this very moment. So that's a little bit about what we mean by multi-speed management, this simultaneous focus on both the current and the future horizons. Maybe if we go to the second hallmark here, the second ways that we think companies can return their revenue and their top line in a fairly rapid fashion, is really about thinking through this next normal concept and spending the time, the leadership capacity, and the mind share about what does a business reimagined truly look like? What is the new playbook for you, for your organization and the industry you sit in? And how do you ensure you emerge stronger? I think it's often very easy. We're finding executives asking us all the time this question, and it's easy to get a bit paralyzed by the uncertainty, right? I mean, this is not one of those things where we turn to chapter 3 and it's clear of, okay, if this, then that. It's not a computer code already written out for us. But I think we do know some things, right? I think we can sink our teeth into the fact that safety and contactless will continue to be something that consumers will be concerned about for a fair bit of time. In fact, 60% of consumers reported in our recent survey concerned about safety for themselves and their families as they think about reopening of the economy. Second thing we know for sure, right? Digital is not going away. The surge we just described, the 10-year phenomenon in the last 90 days, that's part of the next normal. Now, is it at the same level? Probably not. But companies are 2x more likely to be selected if digital experiences are outstanding. Like, this is going to be the part of the normal that we ought to all get our hands around and really start to invest in. And then maybe a third thing we know is going to be a part of our the way that people shop, think, and decide is really around the virtualization of products and services. And so getting ahead of that now and thinking through where revenue streams might emerge from virtualization, whether that be live stream shows, virtual classes, you've all seen some of this emerging. This is here to stay as well in some form or fashion. And so as we've been working with executive teams on some of these challenges of reimagining the business, some of the levers we've found to be most powerful are things like rethinking the ecosystem. And what we mean by that is not just staying within your own sandbox of your organization and what you do day to day, but thinking about all the people, players, competitors who might touch the same consumer at different parts and times, and thinking about how you might consider M&A or partnerships or joint ventures in order to better deliver for your customer. Never a better time to be thinking about that. We also think it's a very good time to be thinking about what you really need to own in the value chain and what you might rent, or what, frankly, might you sell. This is part of the equation of reimagining the game board. And we think the value chain is a perfect structure for thinking through how you distribute your product, your supply chain, and where in all of that are you adding true distinctive value, and where might someone else actually help deliver new value that you can help capture as well. So this is a little bit more of what we mean by reimagination and some of the things we're helping management teams think through at this moment.
Brian, a question on the reimagination, reinvention. COVID-19 is clearly a global phenomenon. What can we learn about reinvention from companies that are farther along on the recovery trajectory than we are in the U.S., for example?
It's a great question, Lucia. I mean, I think, you know, what is fascinating in this is, while it's a shared experience we've all gone through or are going through globally, that we're not all going through it at the same time, obviously. And so there are some markets that are further ahead of the United States, for example. And even last week, I was participating in an executive forum in Asia virtually, where some of the executives were talking through what they wish they had known 4 weeks, 8 weeks ago that might be actually useful for some of our Western market executive teams. And there were 2 or 3 themes that really came out of that discussion about what they wish they would have done or known. I think, you know, it was interesting. I think regret number one, if there was one, was really around, boy, we wish we would have spent more time thinking about the recovery and the actual reimagination itself. They just had spent so much time, 150% of their energy had gone into the here and the now, appropriately so perhaps. But regret one was, we wish we would have carved out some time, some true team time to think about the next horizon. Regret two was really around the volatility that they're now facing. And I think this is a good lesson for all of us. Volatility is probably the one thing we can all count on. And this isn't just going to smooth out at some point in the 60, 90-day time frame and all of a sudden be fine. I think what they're seeing, at least, is that this up and down motion of signals is really tough to get your arms around. And so their regret number 2 is not having a full set of instrumentation around tracking that volatility and knowing how to handle it and manage it best. And maybe the third one, if I'm just synthesizing it all up, was being able to not only have a read on demand signals, because expecting where this demand is going to happen was not easy, but also having your teams ready to be deployed when that demand did show a signal of peaking up. So these are some of the lessons, I think, if we were to grasp any from our Asian colleagues. That's what we heard last week. I think it's good advice for all of us to think through. Maybe just to move us on to the third, granularity is something that we've coined here just in the last couple weeks. And it's because this point that actually the Asian Executive Forum raised was really around the need for close to real-time insights and to be able to act on those demand signals. And you see here 3 maps, one of the United States, one of Texas, one of Florida. But I think the point is that as you look at the different shades of each county here, this is just looking at different data sources that we're actually piping in here at McKinsey to get a read at what's happening in a real-time way. And what we're doing is we're looking at things like credit card data. We're looking at mobility data. We're looking at the virus data itself. And you can even see from just looking at the state of Texas, the state of Florida, this is not a moment where you can take regional choices. The variability is so significant, really, on a zip code by zip code, county by county level, that understanding the nuances and the insights on a daily basis in this kind of granular fashion will be something that a lot of the leaders coming out of this will be able to do. And it can affect a lot of action, right? Think about your ability to target customers or plan your digital marketing or media differently. You can imagine in places that are perhaps not having as much impact from the virus, your messaging might be different than counties or zip codes where that's not the case. And then, of course, even operationally. How you optimize perhaps your stores or your supply chain or where you send product could be affected by these kinds of insights. So this is a true new mark of what granularity really needs to be incorporated into an organization's dashboard, and I think a good bar to set for the aspiration for how companies can act in a more granular way. Granular is not just about location, though. And Kelly, maybe you can help us think through the other sides of granularity that we've seen be helpful.
Yeah, thanks, Brian. Another level of granularity building on where Brian is going is at the customer level, right? And this could be demographics, it could be shopping and spend patterns or omni-channel interactions. But I think the important point is this is hyper-personalized at a one-to-one level, right? Sort of the holy grail we've been talking about for some time. And as Brian said, we know from prior recessions that customer experience leaders suffer less, so they have, statistically shallower troughs and they rebound faster. So they get back to pre-recession levels quite a bit faster. Fast forward to today, we believe that is going to be a timeless truth. We also believe, though, that the leaders are going to go beyond. They're going to go beyond survey-based insights to build these really powerful data and analytics platforms with the goal of, completely re-engineering their customer experience and their journeys, right? And they want to do that to be more holistic. So they want 100% of the customer voice, not just, 7 to 10% that often characterize sample-based approaches. We also want them to be predictive. So it's not good enough to know how they did respond, but we want to know how they're likely to respond, right? More prioritized. So, getting your arms around the driver's experience that really matter most. And then most importantly, value focus. So could it pass the, as I like to say, the CFO test where we can actually link 100% of the decisions to value. And, in our experience, these principles represent the foundation of this next normal journey platform, which is what you see here. And if you start on the left-hand side, what we like to do is essentially define at a very granular level what are the features that make up every journey, right? So you can see here, and as Brian said, this is bringing together everything from customer data to operational data and financial data, not just at an aggregate or a segment level, but literally for every single individual customer. Then using that data lake to apply machine learning, so scoring literally every single customer, and then we study the relationships between journey features, satisfaction, and value to predict, what will really matter most. So instead of just the classic 360 customer views, we're actually going beyond to add a fourth dimension of predictive insight. Once you have that insight, right, you can really start to prioritize drivers and redesign this next normal. So you can know which customer segments to focus on that are both high value and maybe at risk versus those that are potential brand champions, right, where you can unlock a bit more of the surprise and delight. And then I think most importantly with this concept of granularity is knowing literally every specific tailored action for each individual that's going to most drive customer satisfaction and value creation at every step, at every stage of the journey. So this is something that, while in the early innings for most companies, we think has a ton of promise. If you move to the next slide, the next theme, as Brian mentioned, is how do we rewire for distancing, right? This is not agile as usual, as we say. And, you've all known for a very long time the power of agile, and agile outside of the IT context is also not a new one, right? I'm sure most of you have your own form of agile war rooms that are, that you sit up in response to the current environment. I think the one thing we are seeing, though, is outside of digital natives, most companies were not bored this way, right? And what we're hearing a lot of our clients say now is, hey, one, this is the right time to rip the Band-Aid off. And two, the way that you embed agile today needs to look very different, right, given the uncertainty we're facing and the speed at which things are moving. In our experience, companies that are rewiring are focusing on some of the elements that you see here, right? Naturally remote, right, which we've been doing for some time in lockdown mode. But how do you recreate the physical war room spaces with things like video stand-ups and virtual collaboration spaces? Naturally that has to be tech-enabled, right, with the right collaboration tools and real-time transparency that is so critical for these war rooms. Engage, this is one that I think is super important and often overlooked. one of the real challenges of working remotely is just a feeling of being a bit isolated and disconnected. So, how do you use things like retrospectives every 1 to 2 weeks or 15-minute lightning talks every 2 to 3 days to make sure that the team feels motivated and inspired? And then to round it out on the bottom, this notion of shared incentives, whether you use objectives and key results or different forms of metrics to get the team aligned, having that single source of truth that can be monitored anytime, anywhere by anyone is critical. The return muscle is a newer twist, right, in the current environment to say there's so much uncertainty. How do you really embrace that uncertainty and incorporate, as Brian said earlier, some of these new signals on literally a daily, hourly basis? And then finally, and probably my most favorite one, and I think is the probably single most important hallmark of great agile teams, is how do you bring the customer into the equation, right? Helping them not just do A/B testing and seeing what's working, what's not, but literally getting them to co-create an experience along the way. Doing that remotely, as you know, is a bit more challenging. So how can you use things like online panels or webinars or virtual shadowing or plant tours to really get into the mind of the customer and help them be part of the solution? And I might, Lucia, in the interest of time, just go to the last slide here. And then as Brian said, the last piece of this is, how do we really tackle self-banked growth by pulling multiple levers? And there's different horizons, ranging from the here and now that most of you have probably already tackled in most forms, to things that are a little bit more aggressive and maybe, might even feel draconian for some companies. But the first is about near-term spend management. This often comes in the form of cash management war rooms. Most of you have probably stood these up in some form. And it could be about media cuts or optimizing your receivables and payables for short-term liquidity, or just doing a lot of the scenario planning given the acute uncertainty. And as you know, this is hugely impactful. We tend to see, 40 to 100% savings, and it's often not just about monetizing that and dropping it to the bottom line, but redeploying it to, channels, campaigns, or initiatives that are higher ROI. So that's kind of Horizon 1. Horizon 2 is what we're calling tech-led efficiency. This is a bit more grounded in, the use of analytics and automation. It comes in many flavors. It could be automating back office processes, shifting customers to a more digital self-serve model that, has this flywheel impact of not only being lower cost, but if done well, actually a better experience for customers. Or infusing, great analytics for sales and marketing decisions. And these collectively can often drive, 10 to 30% savings and again, some uplift if you do it well. And then the last piece of this is a bit bolder, right? So how do you fundamentally shift how you approach your portfolio? It's about rebasing your cost structure against the new reality of a lower top line. And for many discretionary businesses, those top lines, can be 20, 30, 40% lower, maybe even more in some cases. So taking a real clean sheet approach. Others, everyone is saying, hey, I have to be much more dynamic in how I pivot my resources to go after high growth markets and segments. Or how do I rethink what I can, outsource versus insource? And the one thing we've seen, in any cycle or in any environment is the dynamic resource reallocators always win, right? 64% tend to have higher shareholder returns than those that are much more dormant in how they reallocate resources. So I know we're up against time, but with that, I'm going to turn it back to Brian just to take a step back and do a quick summary.
Thanks, Kelly. Yeah, I think we are at the time, and we want to respect that. I think you're seeing here on your final screen. We just asked you all to sort of think through these questions about across these 5 elements. Multi-speed management, are you operating at that kind of ambidextrous speed? The business reimagination we touched on, the granularity, the virtual agility, the self-bank growth, and is there an opportunity to perhaps inject some of this in your go-forward plans? We appreciate the opportunity to share with you, and we wish you all well. Lucia, over to you.
Yeah, Brian and Kelly, great discussion, and we appreciate your taking the time to speak with us today. On behalf of McKinsey Live, we thank all of you for joining us. We hope you enjoyed the conversation, and we look forward to your feedback in a super quick 10-second survey that will appear when you close your event console. Also, note that in a few days, we'll post a recording of today's session on our COVID Response Center on McKinsey.com. You can also visit the COVID Response Center for details on upcoming sessions, including Operations in the Next Normal, which is next week, Wednesday, June 17th. We look forward to having you join us next week. Take care, see you there, and have a great day or evening.
Thanks, everyone.
Thanks, everyone.